following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the fantastic Friday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right, when you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to throw at us. Today, we're going to go look at the circumstance of the bulls and the bears, the buyers and the sellers. We'll go figure out what it is they're communicating to you and I want you to know that I'm absolutely grateful for your presence here. Now, I'm here to serve you, so feel free to pick up that phone at any time. Dial on in at 877-927-6648. Maybe you've got a question. Maybe there's some confusion. Anything. I'm happy to assist you and at least give you another set of eyes to lay on whatever it is that you're looking at. Maybe together we can go pick the combination lock of these markets out here. Of course, this is Fabulous Friday. It's Tiger Financial Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading up 105 points at 17,595. S&P's up 17 points at 2,069. NASDAQ Composite up nearly 100 points at 5,018. Russell 2000 is up 3. The DAX finished up a whopping 302 points. The FTSE up 67. Gold is off $3 right now. Seems like every time I do the show here lately, gold is down about $3 or so. You've got silver. That is flat. Light sweet crude is back 76 cents out there. Leading the charge to the upside, it is Alphabet Soup. It is Google. Up a nice $58, trading out at 709. Of course, it depends on which shares it is that we look at out here, but they're both up $50 plus. Amazon up $40. That's up 7%. Athena Health, I believe that thing was in the tank yesterday. That is up 20% here this afternoon. It's up $26. ChemEd Corp, that's up 17%. Allergan's up 7%. Priceline up $15. Trade out at $13.69. To the downside, you've got a company called Stericycle. There you go, SRCL. And that's down $31, down 21%. Skechers, the shoe company, that's down 35%. That's interesting. Skechers, they sell shoes like Nike and Under Armour. What else they sell out there? I wonder why they are to the downside. I thought those stocks are up at their highs. Huron Consulting Group, that's off $16. Whirlpool is off 13. VF Corp down 9. Palo Alto Networks off $9. So Pandora's off. Pandora down 35%. That thing, it looks like it's toast out there, or on its way to being totally toasted. But let's go take a look at the markets out here. I don't know, where is it that we should begin? There's absolutely trouble in paradise. I mean, there's no question. It's been an extraordinary week. It's been an extraordinary run since September 29th. You know, are things coming to an end? There is problems in paradise. And you and I have looked at these problems here for what seems like the past week. It's been at least the week that we pointed them out. But certainly you and I have focused on them during the week out here. So if you feel like you've missed out on this run higher, here's the problem. There is some kind of short-term top that is in the process of forming out here. I know it's hard to believe with the markets the way they've been up during the week. And I don't know what it is that's going to trigger that event. It certainly is not the earnings of many of the big companies like Amazon, like Google, you know, as we saw yet, like Microsoft, as we saw yesterday. But there is absolutely problems. So let's just point out the problems here. Or at least we'll point out some of those problems. Here's one problem, the Euro-Japanese yen. We took a look at this yesterday. This thing broke through a rising trend line out here, little cone of silence that it had been traveling in. This currency pair is headed down to 131.86. Looks like the U.S. stock markets, the world stock markets, haven't gotten the memo that the euro-Japanese yen is on its way downtown. That is never a good thing for the markets. And today would have been an optimal day for that currency pair to correct and say, I want to get back inside that trend. It didn't do that. In fact, what it's doing, it's extending its losses to the downside. Never a good thing out here. I pointed this out earlier in the den, and this was as the market was moving higher. And as we take a look at the Russell 2000, again, the bottom portion of this chart, nothing more than just simply the Russell 2000 divided by the Russell 1000. And in bull markets, which, it's very hard to say, knowing that price, we took a look at this yesterday. We spent a lot of time yesterday taking a look at the longer-term trend, taking a look at the longer-term markets, media, weekly markets, daily, monthly. So we looked at them all, and we certainly know that we saw the pullback that we saw August 24th. During that August 24th, September 29 time frame out there. We know that price came back and tested the rising trend line inside of the Dow, inside of the New York Stock Exchange. That level was rejected. So the trend has not broken. The transports, which gets trashed so much by many folks out there. Did you know that the Dow transports have not, during this move down over the past year, however long it's been, less than a year, I think. Do you know that the transports have not gotten down to test their trend line? That's actually more bullish than it is bearish out here. But this one that you and I are taking a look at, though the bull markets do much better when the Russell 2000, as I've said, is out there leading, at least when the small caps are outperforming the large caps. And that is not what's taking place as we speak right now. It was not taking place yesterday with that move up of 300 points in the Dow. It was not taking place with the market up 170, 180 points, whatever it was earlier this morning. We can see that this thing, if you take a look at this current line here, and so the Russell 2000 is absolutely, it is like Paul Revere riding through. Now, it doesn't mean major top, but it means until this ratio turns around, there's problems out there. I don't know what they are. I don't know where they are. What I do know, just take just look at this chart. There are times where things simply become where the correlations, I guess, just simply fall apart. But, come back here, take a look back in 2009. Take a look at the major bottom back in 2009, right, in the market. And if you take a look at the Russell 2000, 1000, you can see that this thing moved higher in a large way. There was also some type of struggle back in about the September 2009 time frame down to the November 2000 November 27, 2009. So we saw where this was moving lower. What did the market basically do during that time frame? Basically went ahead and went sideways out here. Now, and of course, I'm looking at the Russell, so I'm comparing this to the Russell. If I put the S&P up here, which I probably should do on the top portion of my chart, or the Dow, it will even stick out, as more of a problem. So that's what I should do out here. But the top portion of the chart is Russell. I can't change that here during this show here live. But let me just say that, and I've said it many times, that when the Russell 2000, when the small caps are underperforming the large caps out here, it's a problem. So that's something that the market has to contend with. And yesterday and today, absolutely, just all we're looking for as a signal here is to just turn up. Hasn't turned up at all. Not even today. If you look at the price oscillators, and I know it's like I mentioned this to you until I'm even blue in the face, so I'm sure that you're blue in the face too. And we continue to have a declining tops price oscillator out here. It's not good for the market. There's a disconnect here. There's a disconnect that I can't figure out, that I have. And what troubles me is, look, I'd like this to be just simply the bull market where the S&P goes up to that 2350, 2450, that the Santa Claus rally began on September 29th. There's always bottoms that form basically, during the October timeframe. So I'd love nothing more than that. But this is troubling. These three patterns we looked at are absolutely troubling to us. And now today, where you've got gaps up, and basically almost across the board, not inside the New York Stock Exchange, it didn't gap up, but inside the composite, inside the Dow, inside the S&P 500, it just simply opens up the door where if, and those gaps are not likely to be filled today. They could be, and so they would just go away. But, if the market doesn't end well, meaning well off of its highs, still in the positive, but well off its highs, and all of a sudden people start thinking about, hey, what's really going on in China? Why did they do what they did? Why, and look, the Mario Draghi BS out there, that is Dewey Hookham and Howe. He runs one of the best advertising agencies that I have ever seen. All you have to do is go, you talk about a politician that says one thing and does something else. This guy absolutely does it. If you go read, the transcripts from what he was talking about yesterday, it was just like a hint that they might. It wasn't like this is what we're going to do, but the market certainly celebrated like that's absolutely was what it was going to do. So look, over the weekend, we've got if over the weekend, or actually come Monday morning, if somehow the market is selling down, it just opens up the opportunity here now for island top patterns inside of these indices out here. I would feel a whole lot better, and look, it can happen at the end of the day to say that's not likely to happen if at least the small caps were outperforming the large caps today. They're not. They haven't. I don't think they will. And so there's absolute troubles in River City. What I also know is if you take a look at the VIX index, there's one pattern out here with regard to the VIX index and when it forms tops. And when it forms tops is, in essence, where we've been for, in essence, the last 4 or 5 days out here. Now, look, there's nothing. There has been no top that it clearly has formed inside of the market. But what I can tell you about the VIX index and a characteristic that has been around forever, screw the 50-day exponential moving average out there. That's only one pattern. And when that price is trading above that, that's when you see just absolute, demolition in price inside the marketplace. That's not really what it is. That's not where tops form. That's where things start to really crush to the downside out here. So we're ways away from that. And that's 1928. You're trading at 1466. But where the VIX is trading right now, because you see, I don't buy into this, it means that the market's complacent, this, that, and the other thing, because I can't create a trading plan from that. I can't create it as an indicator to really tell me much. But what I can say is that just as when the market extended itself above this little blue line out here, back here at the highs on August 24th, and as soon as price ducked its head and closed inside these bands out here, like you go back and take a listen to the show on September 10th, I guarantee you will have heard me, as well as maybe go back and find some postings in the den, that the VIX was going to move all the way back down towards the bottom of that band. And that's in essence what it has done out here. Well, look, the same principle applies. This thing has gotten overextended. We've got at least three or four. Look, there's a fifth one out here. We took a look at it yesterday, the XLY XLP ratio. That too was out of whack. So it doesn't mean that this is like here's the problem. When a top forms, what none of us really know, you or I, is this like a really short-term top? Is this where something could get, just like at the bottom on September 29th, the feeling, the emotion out there was like, hey, this isn't going to end anytime soon. Well, guess what? It ended on September 29th. So there's problems in River City. Enough, I'll get off my soapbox because you don't want to hear that anymore, do you? We'll go take a look at other price projections from the bullish side when we come back. This is Steve Rhodes with TFNN. Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. A bunch of great questions, requests inside the Tiger's Den. So let's go ahead and get straight to them. One coming in here was asking me how are the equal weighted ETFs holding up against the weighted ETFs. So in the case of the SPYs, and there's a couple, there's a handful out there that you can take a look at. The one that I like to look at is the Guggenheim S&P, mostly because I just like the name Guggenheim. But, of course, the Guggenheim Museum, that's a pretty cool place. But as we take a look at the RSP, again, as a ticker symbol, that's the equal-weighted ETF for the S&P 500. We like to see if there's any kind of divergence inside of those because when there is, it's the equal weight that usually paints the way. And as we can see right now, there really is no divergence. The equal weight, is making slightly higher highs out here. Not anywhere near the move inside the weighted, but there's really no divergence inside of the SPY versus the RSP out there. If we go take a look at the equal weight versus the QQQ series, that one we take a look at the First Trust NASDAQ. Not nearly as fun of a name to pronounce out there. I don't think that the Guggenheim, has an equal weight for the Qs out there. I could be wrong, but and if I am, tell me because I'll go ahead and put that symbol up there. But that would be the QQEW, the equal weight out here. There is no divergence as we take a look at it. Well, let's look at one thing out here. Give me before I say that so quickly. There's none yet today. And the Qs look like they're headed back towards their high. Now, remember, when we're looking at line charts on my screen out here, they're simply the closes of the session. So it's nothing to do. How could it really a line chart, align with highs or lows? It's just the close of the candle session. So it looks like which is the bottom of my screen here, the QQQ series, is very close to being able to get back to at least its closing high out here. And right now, so that could be the first one to set off a divergence, because the equal weight, excuse me, the equal weight is nowhere near that high out here. So those are really the two to take a look at. There is one for the Russell 2000. By the way, I'll pop that up on the screen here. That is a Guggenheim ETF. That's the EWRS out here. But that one just doesn't tell me a whole lot. I say you spend your time. The only reason why I have it out here is just for, things and giggles out there. You can go ahead and fill in the blank there. So that takes care of that. There was a question about the euro. We already covered the euro Japanese yen, but let's go cover the euro versus the U.S. dollar out here, because that is breaking through. Where's my here we go. That's actually breaking through a significant level of support, in my opinion, your opinion as well. And that's the support of the rising price channel that began back in March of 2015. So that's the yellow a diagonal line that is on my screen. I'm really more worried or more focused on the bottom because of, and where that's drawn is accurate. Again, we're taking a look at co-locations. Doesn't matter whether it's an open or a close of a candle. And you can see that yesterday the euro was moving down into that wide-ranging bar. Why stop there? It could have stopped there. But at this stage of the game, it has broken through that level. Now, where's price likely to head to inside the euro? Well, your target should always be the previous swing point. So in the case of the euro, that says the August 5th level, which is somewhere between $1.084, 1.093. It looks like that's where it is targeting, and it's not into that swing point yet on the daily. Let's check out the weekly, just see if it's inside that swing point. On the weekly, it is inside the swing point. So the weekly high was 1.1017. You're below that as we speak right now. So sets off a pretty good message that it's going to go test the bottom of that fairly wide-ranging bar to the downside. So that's the weekly chart we looked at for the euro U.S. dollar. So what does that mean? If this is going to get weaker, the U.S. dollar index should get stronger just simply because of its 65% weighting inside of that. If we take a look at the U.S. dollar index and we pull this back out here, we can see the U.S. dollar index is really dealing with, took out one level of support, which would have been the highs here from September 4th, September 25th. It's headed for the top of the swing point on August the 18th. And if the euro continues moving down, this simply will continue moving higher. So that says, well, what's going on inside the world of gold? Gold's actually doing pretty darn well. Now, we've talked about gold needing to go ahead and make a retracement. And that it is doing. I don't believe it's over just yet. But, it's behaving really well. If we just take a look at retracements from low to high out here, you're going to see that what it did today was it hit the 0.382 retracement. 1158.10 is the number. So that's an area that you want to watch, because if price gets below that, it just may be setting up a really nice buy for you and I at 1137, give or take. Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization memorization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 131. The other requests inside the den that I want to get to is a question about taking a look at the NDX 100, the Qs out there, a number of those stocks. So if we take a look at some of those stocks. Now here, if you take a look at the QQQ series ETF, this is as of yesterday. So as of the close yesterday, what we can see, 109 issues inside the QQQ series out there. That's interesting. There should be 101 with the NASDAQ 100. That's really interesting out here. In any event, inside the Q Series ETF, there's 100, and it shows 109 holdings out here. The top 10 represent 49.6. Isn't that pretty wild? Maybe somebody else can check that out, see if they see the same thing that I'm looking. I'm not going to download. You can go into the trust and download the exact holding. So maybe eSignal's got it wrong out there. There's two Googles. That's why I say 101 inside the NASDAQ 100 makes sense. 109 doesn't make any sense to me. In any event, we can see those top 10s are Apple, number one, 12.8%, Microsoft, Amazon, Facebook, Google, in both their A series, B series, Intel, Gilead, Cisco, and Comcast, and so that represents 49% of the ETF. Now, if we take a look at Apple, see what Apple is doing out here. Now, in the case of Apple, Apple has cleared its daily resistance level, its TAS market daily resistance area. Now, that was set up because the dash line, the blue dash line versus the blue solid line, was set up that was a level of resistance out here. So, number one, that's very good for Apple. And as long as Apple stays above 116.89, my goodness, it opens up the door to go rescue the passengers on that island out here. And it's got an island reversal top from July 20th and July 21st out there. Of course, that led to, I won't say that led to, the significant decline that we had in August 24th. But look, it was a real warning shot. That's why during that first segment, with things not lining up properly here, and I don't need them all to line up, but to have so many of those indicators in a bull run, and none of them actually having made the turn to confirm what it is that you and I are looking at out there, something is definitely not right. And it's probably right in Denmark, but it is not right inside these stock charts that you and I are looking at, speaking from a technical perspective. Okay, so back to Apple. Apple's also got volume of 38 million shares, taking out a swing point with 56 million shares. So that's not necessarily that great, with regard to, and I don't know where it's going to end up at the end of the day, but let's take a look at Apple on a weekly basis out here, and that was really to take a look at a possible A to B equals C to the upside. If we take a look at the weekly swing point out here, the volume was 277 million. We've done 201. So that's not likely to happen out here. That does not mean that Apple won't get to 128 and change out here. If we take a look at other retracements inside of Apple, it's right at its 0.618 retracement level. That's 118.29. You're 118.75. It is a widest ranging bar. Bearish on Apple is closing back below the swing point because it will have tested on a weekly and a daily, and also would potentially would reject the close below 116.89, rejects the TAS market profile. So watch that as the number inside of Apple, 116.89, could just simply be moving higher with light volume. If we take a look at Microsoft, up $5, that's up 11% nearly. This is the weekly chart out there. Now, in the case of Microsoft, we can see here that, in essence, it had made a double topping pattern, or that's what most people would have called it. I'll point your eyes to something that you ought to pay attention to, because it really wasn't a double topping pattern. And let me explain why. We're going to turn off the profiles. But the double now this is a weekly chart that we're looking at out here, just to make it a little bit easier to get rid of some of the congestion. But if you take a look at the high inside of Microsoft during the week of November the 10th, high out there about 50.05. The high that came in during the week of April 27th out at 49.54. At that stage, everybody said, hey, that's a double top. Look, a double top has got to be able to take out the previous swing point. That is not what took place inside of Microsoft. Instead, Microsoft went all the way back down to create the so-called double bottom. Guess what, guys? It's not a double bottom either until it takes out the swing point high. Well, guess what? That's what it's done today. That's what it's doing this week. So what this really was a consolidation. Not a double top, not a double bottom. If anything, it was a double bottom, because now that top has been taken out. But the bottom line, it wasn't a consolidation. Consolidation first. So the question is, where's price going? Very simple. The price projection of any consolidating pattern is going to be the high to the low. That's our measured move. That says that Microsoft is probably going to run up into the $59 area. And just like in the case of Walmart, if it does ever get back, before it does that, if it gets back below the high, we'll call it the $50 level, then price will go all the way back down to the bottom of the consolidation, or should go down there. So that is what Microsoft is doing. If we take a look at amazing Amazon, in the case of Amazon, I pointed it out, didn't pull the trigger, but would, kicking myself all over the place on this one, because I pointed it out to all of our listeners and others out here. If we take a look at, because I had answered the question before, a caller said, hey, where could Amazon trade back to? And that was probably in about the March 2014 timeframe. And I said, that's pretty simple. Let's go take a look at the rising trend line, much like you and I have looked at the rising trend line inside the Dow. We know how important that is inside the New York Stock Exchange. And as we take a look at this inside of Amazon, guess what? There too. And when price pulled back the week that began October 1st of 2014, and really for 4 weeks down here, price just kept testing, and rejecting the bottom of that trend line out there. Now what we can see, just simply coming off of the swing point from December in 2011, if you look at A to B equals CD patterns, this suggests that Amazon on its way to 675.33. That's at least a monthly chart as we take a look at it. That's a absolute shame, and that's disgusting because it was in the $300 price point out there. In any event, in 1 year's time. If we take a look at Facebook, Facebook's got some problems. This is the monthly chart. We're not interested in looking at the monthly chart. There's just not enough data, but we will look at the weekly chart out here. Now, why did I say it's got some problems? Well, if you do take a look at the week of July 20th, 185 million shares were out there, and this week you're up above it with 132 million shares. So a rejection of that swing point, not saying it's going to happen today, could happen Monday, whenever, is any time Facebook closes back below $99.24, it opens up the door to move all the way back down, probably to this hammer candle out here from the week that was September 28th. On a daily basis, let's just see if, let's give it the benefit of the doubt. Is it getting past the swing point on the daily charts out here? That swing point July 21st, 39 million shares. You've done 29 million shares thus far today. Probably not going to do another 10 million shares. It could, but at this stage here, it looks to me like it's just some light volume. Where is it headed to? It's probably headed back inside the range out here at some point in time, getting back below the 99.24 level. If I look at market profiles, let me turn those on, and you can see. Now, if, on the other hand, Facebook pulls back and tests the 99.24 level, and then boings its head off of that and moves higher, then we have a different story inside a ticker symbol FB. If we look at Google out here, Google's up $59. And we're looking at the GOOG symbol out here. Google, let's take a look at the weekly time frame. So let's look at a longer term time frame in the case of Google. Swing point that it's taken out has got 19 million shares on a weekly basis. You're at 14.4. You're likely not to 19 and 23, you're at 14.4. So Google not taking out its swing on a weekly with volume. Daily, it's got to be taking out the daily with volume, right? That swing point takes you back here to, and look, even the last, the interesting thing about Google, if you and I just look at this chart out here, it had a heck of a lot more volume back on July 17th when it made that move. That had 11.1 million shares, and you're at 4.6 million shares out here. It looks like the buyers basically are drying up inside of Google. Why was there so much more enthusiasm back on July 17th versus on October the 23rd? I don't know the answer to that, but it's clear as bell that there's a slight problem. Now, Google only has a problem. Google typically had this pattern. And the pattern is that on earnings, typically the way that Google trades on earnings, it'll do that nearly to its next earning date, which should mean that this thing should trade higher. But I have noticed over the course of the last several earnings releases, over the last several quarters, that pattern seems to, and it used to be the most consistent at doing that. And it seems to have maybe gone by the wayside out here. So, I don't have a really great read here on Google other than just to point out what I did point out. Intel, if we take a look at INTC out here, Intel right now has completed a 1 to 1.272 A to B equals CD pattern, 3465. Now, it also may be the next level. It would say taking it to the next level would be 3649. But let's not stop there. Let's go ahead and take a look at this on a weekly chart. And the weekly chart shows, what does it show? Let's take a look at the retracement. Could be showing a Gartley sell pattern. I'm just simply going, yeah, it is. So it says that Intel probably headed to 3511. Boy, you're going to say, wow, that was really a tough call for you, Steve. It's traded at 3491 right now. Look at 3511. You get back to the 0.786 retracement level. If it can close above that, if it can move above that, and then 3790 goes back to its highs out here. I'm not saying short Intel, but we do want to watch Intel with regard to what goes on inside of the SOX index out there. But on a daily basis, volume-wise, let's take a look at volume as it gets above or is trading near its swing point from May 29th. May 29th, Intel was up at these. Oh, that's interesting. maybe some of those factors that I pointed out to you, like the Russell 2000, like the Euro Yen, the XL, the consumer staples versus discretionary. Maybe some of those things are actually really, those aren't the only things that are out there. In the case of Intel, the swing point for May 29th has 43 million shares. That's what it's testing. That's the A to B equals CD. So that's really interesting. If we actually turn all this off. Let me do this. Let's get rid of the boxes. Let's get rid of the Fibonacci. Let's get rid of the A to B equals CD. Let's just have a nice clean chart. This is actually very interesting when it comes to Intel. And that is, if we take a look at this gap down from the trading session of January 27, there was 58 million shares there. Then the last time that it was up testing was on May 29th with 43. And today you're up with 27. Now, granted, it is above that level of 34.72. But so what does that say? It says maybe it's going to go repair the window. Maybe Intel is going to go ahead and try to get up to the 35.57 level, but it could fail at 35.57. It just simply doesn't seem like it's got the volume or the energy up there. INTC. This is fun. Let's go take a look. I don't see if there's something in the den that I haven't gotten to. Please retype in that question. I just have a small little window out there, and I don't want to overlook a request. If we take a look at Gilead Science, you can see my system is churning and burning out here. Well, we did look at Google. It's not going to see any difference between Google, the L shares, and the GOOG. So we won't do. But thanks for asking. I don't know why my system isn't showing Gilead. Maybe we will. That's very weird out here. So as much as it's only up a nickel, so that's not participating much in today's rally. You've got Cisco up about 0.75%, and looks like my system doesn't like something that I said to it because I have a blank screen. That means it's going to be very, very difficult to actually tell you what any of these stocks are doing out here. That's a darn shame. So we're going to have to go to Plan B until that populates. Let me see if I can do a Plan B out here. Oh, there we go, populated. See, all you have to do is threaten that you're going to go and you're going to go use the sweetheart. If we take a look at what's going on inside of Cisco, last time that we were up at these levels was back on the August 13th time frame. 60. Oh my gosh. That's wild. So last time that Cisco was up here, had 61 million shares, and today you're up with 15 million shares. Even if I go back further, 24 million shares on June 18th versus 15. Cisco is probably going to peter and pan out right here, right now as we speak at this 29.20 level out there. Question to take a look. Let me see if I can get Gilead back up on the screen. Then we'll go take a look at IBB. There we go. So we got Gilead. Geez, this is not doing a whole heck of a lot. This looks like it tested its swing point out here. That was a swing point from September 17th at 9.8 million shares. So it's tested it today with 9.7. Tested it yesterday with a volume of 24 million shares. This is proving to be a formidable spot. But of course, these these names here, names within inside the IBB, that was another request to take a look at. Certainly are just the ones that have been taken out to the woodshed out here. So let's take a look at the IBB. What is it doing as we speak? It's trading at the 315 level. This daily charts we're looking at. Light volume as it tries to get into the swing point here from October the 5th. So what is the IBB doing? Hey, if it can close above 315.22, that's where you're trading at right now. It could run up to the 330 level. Otherwise, it's just going to consolidate perhaps in the 315 to 292 level out there. That is the IBB. So there we go. I think I have taken care of all of the requests. When we get back, if there are no more requests, we'll try to summarize what it is that we're looking at. Maybe some price projections to the upside out there. Maybe a couple of mining stocks. This is Steve Rhodes with TFNN. Dow is up 150. S&P's up 22. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Dow's up 151, S&P is up 22 points. Let's go check in. We took a quick peek at gold out here. Let's look at this at light sweet crude here real quickly. It's trading out at 44.63. That is trading back into, really, this thing has been in a consolidation as well. If we take a look at that consolidation, that's running from, come on, work with me here. We're on live TV/radio. There's your consolidation box. I mean, it's traded right back to the bottom. So light sweet crude ought to should find a bottom here. Now, if it takes that out, that says the price goes all the way back down to the lows out here. Well, the lows that I'm referring to are back from August 24th around $39 out there. If we look at just really an intraday chart here, a 30-minute chart, see if there's anything that shows up on our screen. Says that bottom probably gets tested again. The low of today is what I'm referring to. On a 30-minute chart, it had some pretty good volume down there. So that low is likely to be tested again, 44.20. I don't see any other reversal signals out here on a 30-minute basis inside light sweet crude. So I would have to say that low probably gets tested again Sunday night, early Monday morning, something along those lines. Now, if we see price crash through that area, then that says you're going all the way down to the bottom. So no trade or anything that I see there inside of light sweet crude. Nat gas, that thing continues to look basically horrible. Take a look at that bar today. So you can forget about seasonal patterns inside of natural gas, and where this is going to stop, I don't know. If we take a look at some of the mining stocks, these have been behaving very well. Let's look at that GLD just to get a little benchmark here from a volume standpoint. So today you're down with 3.6 million shares. It broke out with 10 million shares. That's where it made its high, so that's pretty nice. Just out of curiosity, let's take a look now what this has done. Is inside the GLD ETF. It has broken through its TAS market profile low on the daily basis, and that always opens up the door to make a run for the weekly, which is down at 106.58. I don't think that is where price is headed to. I think we'll see a low form before that level, but 108.59.60 or so is not out of the question. But remember, you got to benchmark. You got to really pay attention to the gold contract more so than you do GLD. Now, that's not the same thing as we take a look at ticker symbol gold, Rand Gold Resources. These mining equities, they have just simply shown their strength, and they're doing it again here today. You've got, so they don't care about no stinking dollar index that's moving to the upside. If you take a look at October 20th, you had 949,000 shares. Now, albeit you're up on light volume today, 459,000 shares, you are up at these levels. That says, hey, worst case pullback, 66.49, most likely where it would find support out there. Let's look at Agnico Eagle. It's off 6 pennies, no big deal. Of course, what you and I know is Agnico Eagle's got this long-term price channel and trend lines at the yellow and the red lines out here. So it just has a little bit of a battle that it is trying to fight, but it will overcome those levels out there. FCX, let's actually just go take a look and see what's going on inside the Australian dollar first, because when you trade FCX, you are trading the currency pair. Whether you like it or not, that's what you are doing. If we take a look at the Australian dollar out here, this thing had a nice move just as FCX did. It has been pulling back as of late, but the retracement is pretty good. You want to see it stay above this red line out here. That's about the 72-cent area. So, things could be said. You've got 1A to B equals CD that's set up inside the Aussie dollar. If we see the second one set up out there, that would say that Carl Icahn is now on the right side of the trade out here. But this currency pair continues heading south out here, so will FCX. Hey, folks, it's been great to be with you. Hope you had a great week out there. Stay tuned. David White is going to be up next, and I look forward to seeing you on Magnificent, Marvelous Monday. Have a fantastic weekend.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.